This is Bloomberg Technology. I'm Taylor Riggs. I'm in for Emily Chang. Today we're taking a look at the stock market, slumping a little bit coming off those record highs, particularly airlines and hotels. Those were hard hit today, all amid signs that the world economy has a long way to go to get back on track. Of course, the tech-heavy NASDAQ dropping now from a record intraday high in the afternoon as heavyweights like Amazon and Microsoft also turning lower. And this all is the virus setting new records across the U.S. You have California's hospitalization jumping to a new high, Arizona's deaths, and Florida's rate of new cases also hitting new levels. For more on this, I want to bring in Kaylee Lyons, who's been all over the market action today on this Tuesday. Kaylee, we were hitting a lot of highs yesterday, but the sell-off seeming to accelerate in the final hours of trading. What stood out to you?
Well, of course, we were snapping a 5-day winning streak on the S&P 500, that quickly coming to its end as we approached the close today. It really was interesting, Taylor. It seemed to be a story of tech outperformance throughout much of the day. And as you mentioned, we saw that weakness heading into the end of trading. Even still, we saw the NASDAQ holding up relatively better than some of the other major averages. I say relatively, it was still down about 0.9%, but that was not as great as the losses we saw on the Dow or the S&P 500. And I want to point out, too, the underperformance of the small caps, the Russell 2000, down the better part of 2%. Of course, those small caps, domestically oriented, much more sensitive to the economic growth story. And that really seems to be the issue today, Taylor, was that investors are kind of pondering whether or not the recovery is going to be a lot slower and take a lot longer than perhaps was previously thought. And you saw that reflected across asset classes as well, in the fact that we got a bit into the bond market, yields moving lower by about 4 basis points, a bit into other safe havens like gold as well. Gold futures above $1,800 an ounce once again. That is the highest since back in 2011, Taylor.
Kaylee, I sound like a broken record, but it really is the resilience of this tech market, the outperformance of tech, really big tech, that has been astounding, I think, to me and a few market participants. What do you make of some of the big tech names like an Apple and Amazon hitting record highs yesterday, despite a little bit of a sell-off today, still very, very high from a price perspective?
Yeah, absolutely. If you look at the information technology index for the S&P 500 relative to the broader index, that is still sitting right around the highest since all the way back in July of 2000. Valuations are very, very elevated. So I think what you saw today was really a bit of profit taking in some of these mega cap names that have rallied so far. As you mentioned, Apple, Microsoft, and Amazon, too, all ended the day lower. Amazon, for its part, falling underneath the $1.5 trillion market cap that it reached yesterday, Taylor.
You know, the trade of the last few months really has been those work from home stocks. Amazon in particular has been one of the star outperformers. And then yet today, Walmart announcing what could be an Amazon Prime competitor. So Walmart shares were up as much as 6% earlier on the news. What are you making here of Walmart's and that announcement?
Well, to me, Taylor, it's a story of the way to get the market to like you is either to be big tech or to be directly competing with big tech. And that's exactly what Walmart is trying to do here, announcing that it's going to, or reportedly going to announce a subscription service that will compete directly with Prime. $98 a year gets you access to things like same-day shipping for groceries and general merchandise. That seems something that could both boost profitability for its web business and also bring it more on par with an Amazon. And so Walmart, as a result, had the best day in 3 months on that report. And I would note, Taylor, too, Walmart was the biggest points contributor to the S&P 500 and was the biggest contributor to, of course, Consumer Staples Index, which was the only one that ended the day in the green today, Taylor.
Kaylee Lyons there, markets reporter, always on top of the news. Thank you for joining us. And I want to stick with some of the big tech movers. And for that, we go on over to Dan Ives, who is over at Wedbush, and he joins us now. Dan, talk to me about these record highs. Does anything about this market, the fact that it's led by so many companies that are getting bigger and bigger, and yet there are fewer and fewer of them, any of that make you nervous?
I mean, look, the stronger are getting stronger, and you're seeing that with FANG names continue to outperform. And look, we think FANG names could be up another 20-25% over the next 6 to 9 months, with Apple our favorite. But I think what's starting to happen now across cloud, across cybersecurity, e-commerce, you're seeing just a lack of secular growth stories. And those names, whether it's 15, 20, 25 names that fit into that, or even the work from home, those are stocks that are going to continue to move higher. And we think we're only in the 6th, 7th inning of what we see as the rest of this rally coming through.
And you're seeing the rest of this rally through 2020? Or are you looking further out into 2021?
Yeah, we believe, especially going into next year, there's been a two-phase way that we've sort of, from a client perspective, to play this COVID-19 pandemic and the sell-off. It started in March, April, where you looked at these rebound names that can navigate through the storm on cloud, and I think you saw a lot of these multiples re-rate. Now you start seeing economic rebound, and you start seeing more normalized 2021 numbers. That's phase two. I think that's the second piece of this tech rally, and I think we're going to start to see that as we go through 2Q numbers, where I do think a lot of these street models start to move higher. Of course, we're going to have volatility with second wave fears and obviously a very shaky macro. But I continue to view tech as we're bullish, and we still think tech stocks have another 20-25% ahead.
Well, and Dan, you've been bullish, and frankly, that call has largely played off for you. Curious, though, as you dive down within tech, some of the names we know, and Amazon, right? That's a classic work-from-home stock where the benefits were pretty easy to spot. What other stocks, sectors do you like that perhaps might not be as obvious?
Yeah, I think in terms of ones that are not as obvious, you start to look at cloud theme and maybe what I would view as almost a tangential beneficiary, which I think is really going to be a huge theme over the next 6-9 months, is cybersecurity. You look at these are companies that are really guarding as more enterprises are moving to the cloud. Companies like Zscaler, CyberArk, Varonis, Palo Alto, which I think is starting a second life. I believe cybersecurity is going to be a massive phase of consolidation. And even though work-from-home names like the Zooms and the Slacks and others have been the main front and center, I think you kind of go to that next layer of cybersecurity and even some of these cloud names like a DocuSign, where I still think that name has a lot higher to go.
Within consolidation, who do you see as a merger or a acquisition potential?
Yeah, well, I think you're going to see both strategic and financial M&A. I think there's going to be a buying spree over the next 6 to 9 months. And especially in cloud, what's starting to happen is that cloud and cybersecurity, you're starting to see more of a blending. So you're going to see more strategic acquisitions. We've talked about Microsoft. You could see Oracle. You could see SAP and some of these other larger companies starting to look for more acquisitions. But I think the prime space is cybersecurity, where I think you could see 10-15% of these companies be acquired over the next 12 to 18 months.
Dan, we can't have you on this program without talking about Tesla. I'm shocked at just this stock that keeps climbing higher and higher. Is it China demand? Is it the EV market? Is it batteries? Is it just a short seller squeeze? What is that bull case for Tesla that, frankly, you've been relatively correct on so far?
Sure. Look, and as we've talked about over the last year, a lot of it was the anticipation about the China market, the Giga 3, what the trajectory is. And now it's not just talk to talk, it's walk to walk. You're going to have 150,000 potential deliveries in the first year coming out of China. I think China's worth $300 to $400 to the story. So I think fundamentally that's key. And then you look at deliveries this quarter, 90,000, and what looks like in the area code of profitability. And that's a jaw dropper in terms of a number. Now you could be looking next 2 years, 1 million deliveries. You start to trajectory that out, $20, $25 of earnings potential. That's why I believe a $2,000 stock is, I think, the next trigger point where the stock can go.
Dan Ives of Wedbush, thank you as always for your time on the Market Insights. Stay with us because coming up next, after a meeting with civil rights leaders, Facebook has failed to appease the group who have organized a boycott of ads. We will speak to the Anti-Defamation League CEO, that is Jonathan Greenblatt, who described the meeting as, quote, "We saw little and heard just about nothing." This is Bloomberg. Facebook CEO Mark Zuckerberg and COO Sheryl Sandberg met today with a group of civil rights leaders who have organized a boycott of the company's advertising products. Anti-Defamation League CEO Jonathan Greenblatt was in the meeting and appears to be somewhat displeased with the results. Joining us now is none other than Jonathan Greenblatt. Jonathan, what is your key takeaway from that meeting?
Well, thank you for having me tonight. Look, ADL is the oldest anti-hate organization in the world. We've seen a lot, but I hadn't quite seen what we experienced today. The meeting was disappointing, to say the least. I mean, the Stop Hate for Profit Coalition, which includes NAACP and Color of Change and Free Press and Common Sense, many groups, we laid out an agenda weeks ago. Our recommendations are simple, they are straightforward, they are doable. Facebook asked us for this meeting, and we expected them to share details and timeframes to execute on our recommendations. Instead, we didn't get details and we didn't get timeframes, no commitments and no outcomes. So this fell far short of what we were expecting.
Are you worried then that these meetings and conversations with Facebook are talking the talk, but you haven't necessarily seen walk the walk yet?
Yeah, I mean, that's a fair way of putting it. I mean, they said, we're not meeting with you because of this boycott. We're not doing this because we're advertisers. But we pushed back because that's the only reason they met with us. In less than 3 weeks, nearly 1,000 organizations, from iconic global brands to small businesses to local groups to global NGOs, they've all joined Stop Hate for Profit. And so what was, somewhat confusing today is we thought it would be constructive and concrete. And it wasn't that at all. I mean, we heard them say, we appreciate hearing about the nuances of the issues. But as I said to Mark Zuckerberg, there is no nuance in white nationalism. It's inexcusable in any context. It just has to stop. And they talked about the neutrality of the platforms, but you can't be neutral on extremism or hate. We expect the company to have a zero tolerance policy on intolerance, just like every other company in America. And today, that's not what we have. And after this meeting, we're no closer to that.
Yeah, talk to me about some of the clear-cut proposals that you talked about today that were in that presentation. What does real change, real action look like to you?
I'll give you some examples. Real change means clear civil rights leadership in the C-suite at Facebook, so that the consideration of these issues runs through the whole company. They talked about maybe creating a job, but it's not clear where and what that would entail. We talked about having showing transparency, auditing their hate content, if you will, by an independent third party with public results, right? In fact, they're now talking about some advertiser group that will look at hate on the platform. But I'm sorry, I don't trust Mark Zuckerberg on anti-Semitism and racism. I trust the ADL and the NAACP, or Color of Change. We talked about simply removing Facebook groups that espouse hateful content. And now this one is really actually pretty straightforward. I'm sorry, I don't believe that QAnon conspiracy groups are playing a constructive role in the public conversation. I don't believe Holocaust denialism is a legitimate scientific theory. The idea that Facebook can't shut these down tomorrow, Facebook, the most sophisticated advertising platform in the history of capitalism, needs to use that innovation and energy to take down 99.99% of hate content. And again, not what they think is appropriate, but what the civil rights groups are telling them is appropriate.
Some of the criticism has come from Facebook offering a platform, but they don't want to police the content. Some of the synonyms I've heard of is it's like a highway, but they don't want to talk about speed limits. Some critics, though, say that they don't want Facebook policing the content, that they don't want Facebook to be the arbiters of truth, of telling us what we see and what we don't see. That could be a slippery slope. How do you respond to that?
Look, this slippery slope argument, I just don't buy it. The ADL has been fighting for the First Amendment for over 100 years. We deeply believe in freedom of expression, right? And freedom of speech. But freedom of speech isn't freedom to slander minorities, right? Freedom of assembly isn't the freedom to assemble around intolerance and promote violence. Look, there are those in our country who are very focused on the political debate and the polarization, and I get that. But there is nothing political about calling out prejudice. Look, there's a reason why you don't have white nationalist programming on Bloomberg. And there's a reason why you don't have KKK meetings at the Marriott. And there's a reason why the alt-right doesn't have book clubs at the Starbucks, because businesses like Bloomberg and Marriott and Starbucks don't want to host hate. All we would do is ask for the very same thing from Facebook. And by the way, it's not just the ADL asking or Stop Hate for Profit. It's almost 1,000 businesses from around the world who don't want their ad dollars subsidizing hate.
What platform, in your opinion, has done the best job at this?
Look, all the social media services are improving. I would note the fact that just last week, Reddit shut down thousands of toxic subreddits. Maybe long overdue, but an important step forward. YouTube shut down several incredibly hateful channels on their service. Again, maybe overdue, but they took a step forward. Even Amazon subsidiary Twitch shut down a very toxic channel just last week. But as we think about all of these platforms, it's critical to remember Facebook is by far the largest and the most profitable of these companies. Its revenue, its profits are larger than any of these companies' top line revenue numbers. So that company has the kind of resources and the kind of innovation that they need to apply to solve this problem once and for all.
Yeah, we just have about a minute here. Curious if you think more regulation is needed or would solve some of your concerns.
Look, we don't need an act of Congress to solve this problem. And we don't need elected officials to solve this problem. We need, simply put, moral leadership. We need Mark Zuckerberg and Facebook to say that there are a set of general values in society like decency and pluralism and accountability. Other businesses live by those values. We will live by those values too. It's actually not that hard.
I appreciate your time. That is the Anti-Defamation League CEO, Jonathan Greenblatt. Thank you for joining us. And coming up, Peter Thiel's Palantir Technologies files to go public. The secretive Silicon Valley startup has long avoided listing its shares, so why now? All those details next. This is Bloomberg. Novavax CEO and President Stan Erck joined Bloomberg earlier to discuss the science behind their vaccine candidate. Take a listen.
We have taken the tactic of having a vaccine that has a recombinant protein that we make at large scale, and that protein itself has the ability to stimulate antibody responses that should be protective. But we also mix it with an adjuvant, and the purpose of the adjuvant is to boost that immune response to the antigen and to boost a T-cell response, so cell-mediated immunity. So our vaccine has both, and we think both components are important.
Do you think that a world where we get like a one-shot-and-done thing, like measles, is actually realistic? And can you give me perspective on kind of timing then for sort of multi-shot versus a one-shot deal?
Yeah, I think the data are looking so far that they would have in our trials, we're trying out one dose at day 0, and we're following that up with a dose at day 21. I think that for our vaccine, it could be a standard dose. Others are taking approaches where they're trying just one dose. And there are several different main approaches to a vaccine. We're all targeting, interestingly, we're all targeting the same protein. It's called a spike protein. And it's a protein on the surface of the virus that has to bind to your human respiratory cells. And if you make antibodies to that spike protein, then you block it from being able to get into your respiratory cells and cause illness. And there are several different ways. There are 3 main ways that we're making this protein. One where it's inside of a viral vector that's been killed so it doesn't infect you. Another one is to make mRNA that encodes the same spike protein. And ours is I guess, the more proven traditional way. It sounds old, but it's not. But it's to actually make the protein itself. It forms a nanoparticle, which is really immunogenic and is seen by the immune system as something they want to put antibodies on. So those three different ways of making that protein could result in three different immune responses, some more potent, some less. And the data will show us, and not very long. We're all racing as fast as we possibly can. We're in phase 1 trials. We're get data by the end of this month, and those phase 1 trials should turn into phase 2 trials in August. And by sometime in the fall, we should have some evidence, because we're going to do this in multiple countries. We should have some evidence that our vaccine is stimulating an immune response that protects and is safe.
Dr. Fauci also talked the other day about the fact that we are starting to see mutations in the virus. Would that affect the spike that you're talking about? If that were to mutate, how problematic would that be for your efforts?
We've looked at it, and so far we're in the clear. So, and that's why you want to have a vaccine like ours, which has a full-length protein, stimulates antibodies to many parts of the protein, and has an adjuvant that broadens the response. So far we're okay.
There's a lot of vaccine under development out there, obviously from many different companies. How is it to get test patients to try the vaccine? I mean, is it easy? Do you have to compete with other companies? What do you do with that?
Well, it's a question that's increasingly asked, because it's not hard to do a phase 1 study. I mean, we had 130 people and we had them in one day. It's as you get into trials with 30,000 people, we can do that as well. There's lots of people who would love to have an experimental coronavirus vaccine. If you get into trials with 3 or 4 trials with 30,000 people, you might bump into one another. And so that has to be worked out. There's certainly plenty of trial sites. There's certainly no shortage of people who would love to try a coronavirus vaccine. So that can be sorted out.
That was Novavax CEO speaking to Bloomberg earlier. And coming up, both Uber and Postmates still unprofitable, but now they are together thanks to a $2.65 billion deal. Will it help them get to profitability? Our exclusive conversation with Postmates CEO, all of that next. This is Bloomberg. Palantir Technologies has filed confidentially with U.S. regulators for a public stock listing, taking a major step towards a market debut that has been many years in the making. Founded by billionaire Peter Thiel, the data mining startup is one of Silicon Valley's most valuable private companies. For more, I want to bring in Lizette Chapman. She covers VC and startups for us here at Bloomberg Technology. And Lizette, it's interesting. They've been private so long. Why go public now?
Well, there's two reasons that they've taken so long. Like you said, it's taken them 17 years. That's more than twice the normal time frame for a tech startup to have an exit. But it had two things going. Two of the reasons why. Number one, it had very rich, very patient investors, like its co-founder, Peter Thiel, who kept funding efforts and was in no rush and had no need to make a really quick flip. The second reason is that it just hasn't been ready. We broke the story back in April, and we talked with you about it then when it gave its investors a projection for 2020 showing that it was going to break even for the first time this year on revenue of $1 billion. The reason they've finally been able to do this is because they were able to shift from being more like kind of a consultancy where they would have to custom build different chunks of their software platform for each client to something that they could actually sell almost straight out of the box.
And as you know more than I do, it's interesting in technology land when they filed confidentially for a public stock listing versus an IPO. There's been a big debate about the differences between the two. What do we know about Palantir as it relates to an IPO versus just a stock listing?
Right. Well, their decision to announce that they were filing confidentially, it definitely created a lot of buzz. That ability to file confidentially has been around for 8 years, and since the Jobs Act, Lyft did it, Uber did it, Snapchat, Slack. So a lot of tech companies like to do it because it allows them to signal to the market or just keep it on the down low that they're preparing to have a public listing, whether it's an IPO or a direct listing, without actually revealing any of their financials, their strategy, any of those details that would possibly put them at a disadvantage while they kind of pull their act together and get ready for prime time. It does make all that information public so that investors can take a look at it, but it'll be much closer to the actual listing, which, as you pointed out, in Palantir's case, we don't know whether they're going to do an IPO and raise money or a direct listing, which is simply existing shareholders selling their stock, which Spotify and others have also done.
What is the biggest data point that you're looking for when the filings and some of the financials of this company go public? So often we've called it a secretive company. What is the biggest data point that you'd like to see as you sift through those documents?
There are a lot of them that have been kept under wraps for a long time. They have these, massive contracts with governments and private companies worldwide. They have multi-year deals with the Department of Homeland Security, with all of our three-letter military branches. And so I think one thing that's going to be interesting is the level of transparency that's going to be available on this company and its operations, where before there was none. You asked regarding the data points. There's a lot of them. One of them that I thought was interesting that we were able to share with all of our Bloomberg readers back in April was what they shared with their investors, which is that a large number of these deals, it was more than 70%, are multi-year deals. And so as of 2020, they had already pre-booked, the vast majority of all their revenue, that they were just going to recognize in this year. So that's something you don't always see with tech companies, certainly not with Lyft or Uber or Snapchat or any of those. So that's one thing I'm sure a lot of people will be looking for, as well as, again, profitability, which is something that they will be working towards. But as of this year, when we reported it in April, they were just looking to break even. Those would be some things that we're going to be watching.
That ever-elusive profitability, Lizette Chapman's all over it. Thank you, as always, for joining us. And now I want to move to Uber's all-stock, $2.65 billion acquisition for Postmates. It's once a pioneer of the gig economy. In an exclusive interview, Bloomberg's Emily Chang spoke with the Postmates CEO, Bastian Lehman, about his decision to sell and what the future of food delivery, what it looks like.
We were very close to flipping our S1, and we were very excited about that path. But what happened in a very quick order is I got a phone call from Dara. We talked on the phone. We came up with what we believe is a framework that makes a lot of sense to bring the companies together, and we took it from there.
So I know you're still working on the integration, but what can you tell us? I know Uber has said the app will still run independently. How many of your employees will have a job in this new world? Will you be working at Uber in this new world, and what will that role be?
Look, I think we've been focused much on the deal at hand for now. And you know that there will be some period of time here during which there is some work to be done from an antitrust side. So we think we have roughly until Q1 2021 to figure out the exact details of the integration. I do believe that Uber is very excited about the brand. It is something that they were missing. It is a beloved brand. It's a very innovative brand, very millennial brand in the food delivery space. And I believe it will be a great combination. And I have no doubts that our team and our employees find a great home in the joint entity. And look, about myself, we really haven't talked about the role at all. But, if Dara were to retire,
We'll let him know that, Bastian. Thank you. Now, this is still a super competitive, rapidly consolidating business, and a lot of the biggest players still lose a lot of money. What is your view on how this market looks in, let's say, 2 to 5 years? Who wins, and are they still bleeding cash?
I think the most important thing to recognize is that this is a market that is so rapidly evolving, right? Let's just look at the scale that Postmates has achieved, 85% of US households within a couple of years. This market is growing. You see Amazon's strong ability to deliver groceries from Whole Foods. You see Target and Shipt. This is a market that is evolving in a rapid pace. COVID, as tragic as it was, has elevated and has pushed this market forward by at least 2 to 3 years. If you look at the concentration and if you look at our order frequency of prepared food, of groceries, you compare this to Europe, the United States are not leading. And I think that the habits of these customers will change and the order frequency and the usage of these services will accelerate. It will include many new categories that are untouched. So I think this is a very interesting space. I believe it's the next frontier in commerce. It will move way beyond prepared food at a rapid pace. And I do think that the players that you see right now, more than it is probably understood, are in their own ways on a path to profitability and have actually great prospects to get there.
Now, all of these companies, including Postmates, has been fighting a law in California that says that your contract workers should be full-time employees with full-time benefits. At the same time, you've got certain cities putting caps on the fees that you can charge to restaurants. And I believe some companies, including Postmates, have been accused of flouting some of those new rules. How big a risk are some of these issues to the long-term success of all of these businesses?
Look, clearly there are challenges out there. If you take AB5, for example, I think AB5 unfortunately got so much or became so much of a political thing that it's almost impossible to talk about it anymore from just a factual basis. But we believe that AB5 really provides no framework for the future of work in the gig economy, period. We have alternatives. We proposed alternatives. We proposed alternatives as Postmates, as a company. We have actually led some of these. We are the only company in this space that has a fleet board where representatives from the fleet interact with the company. And it's a beautiful thing to see that. But we also have jointly proposed a different way. And we will continue to seek a legislative compromise that I believe is a lot better than what we have with AB5. Now, if you think about cities proposing under emergency laws certain restrictions to these platforms, there are clearly things that we can do that are better than simple restrictions on the take rate. I believe that funds that all of these players pay into that get evenly distributed to the restaurants are a much better approach. And we continue to advocate that with the cities that we're operating in, and we're making great headwinds there.
That was Postmates co-founder and CEO, Bastian Lehman. And coming up, TikTok meets the Amazon shopping experience. We'll hear about Verishop's latest e-commerce initiative from CEO Imran Khan. All of that coming up next. This is Bloomberg. Social shopping has long been a strategy like from some of the Chinese tech giants like Alibaba and Weibo. Now, a Santa Monica-based startup, Verishop, hopes that the trend will catch on in the U.S. They're launching a new e-commerce app, which the company says will help set it apart from previous social shopping initiatives by Facebook and others. Joining us now for more is Verishop CEO Imran Khan. Great to have you here on the program. So how do you start to stand out from some of the other social commerce sites that frankly haven't really been as successful?
Yeah, and thank you for having me. So I think one of the most interesting things is when you're trying to build a new innovation, you have to make sure that you deliver the core experience first. I'll give you a story. When iPhone first came along, I was living in New York in 2007. I went to the Apple stores on the Fifth Avenue and bought a new iPhone. And the first thing I did is call someone. Because if I had to give up my old phone and get a completely new phone with new carrier, AT&T, because I was a Verizon customer, I wanted to make sure the phone works. So I think a lot of the companies who try to innovate on the e-commerce space forget the core thing that you need to deliver the best customer experience, have to deliver great selection, and have to make sure that people get the product on time. And that's what we did the first year of the company's life. We really invested on our delivery system. We really invested in convenience and customer support. Our net promoter score is now higher than Apple. We have 75 NPS score. So now we are building innovation so that we can delight our customers even more.
And I understand the timing. We're all at home using these devices that I have in my hand, sitting around scrolling, through social apps to get items that you purchase online. On the other hand, though, are you all worried about the consumer? I mean, we're in the middle of a pandemic. We have millions of unemployed. Are you worried about the health of the consumer to be shopping as much as you would like them to be?
Yeah, I think the most interesting thing about what we built, it's not about shopping. It's about entertaining. It's about, during your busy day and stressful life, having 4 or 5 minutes of pure joy or entertainment. The purpose of the Project Explorer that we just launched today, it's not about we're trying to put something on your face to buy right away. That's not the purpose. Purpose is you go there, you have 3 minutes or 4 minutes free time in between your hectic life. You can consume great content. And if any of those content really inspire you, guess what? We make those content shoppable for you through computer vision. You can click on it and computer vision will recognize what are the products there and will recommend the exact same product or similar product. So the goal is that the product is we wanted to make consumer entertained. And if they happen to shop, they can shop. And that's, I think it's a really differentiation from what we have in the Western world.
And what lesson did you take from Snap that you're now applying in this new app that you're launching?
Yeah, I think Snap, was a great experience for me. Before that, I worked in Wall Street, and I had the great fortune to work with Evan, who arguably one of the best product person of his generation. And I think really, big thing we learned, taking inspiration from everyday people, how people spend time and what problems people are facing, and build product for that. And learning that thing from Evan and the great team that Snap had was really, really exciting. And that's what we're trying to bring at Verisure.
You're well connected within the world of Silicon Valley. So while we have you, I'm very curious to get your thoughts on Palantir Technologies. In the last segment, we were talking about what's formerly a, quote, secretive company, confidentially filing maybe an IPO or a stock listing. Your thoughts on another tech company that arguably is not profitable now coming out in this environment to potentially IPO or direct list? Yeah, so,
interesting, I engaged with Palantir 2 jobs ago when I was in investment banking. And, great company, seems like they're solving a great problem. I have not kept in touch with them because I moved on to a completely different field. But I think going back to your questions, I think there are incredible amount of investment went into these private companies over the last 15 years or so. And, I think if you look at companies like Amazon or Google or a lot of these companies, when they went public at much smaller scale. But, because investors are much interested in investing in private companies, you saw a lot of capital went there, and these companies have grown and matured in a private market. And so there are a lot of interesting companies in the private space, and I foresee at some point some of those companies have to go public. Obviously, I cannot really speak about timing, but I think it's healthy for some of these private companies to good private companies to come public. Again, I didn't keep in touch with Palantir, so can't specifically comment about Palantir, but it's healthy for some of these great private companies to come to public, because then public market investors and 401k and potentially can participate on that rather than, few institutional investors and high net worth individuals who has access to this private market.
Well, with your expertise and experience in the social media background, TikTok, of course, is another company that we've been following, now pulling out of Hong Kong due to some of the newly enacted laws that China has imposed. Your take on not only TikTok pulling out of Hong Kong, but that some of the other scrutiny that TikTok itself is facing here within the U.S., as we're not quite sure what Beijing is doing with that data that TikTok may be gathering.
Yes, so I think TikTok team has done a really, the parent company is ByteDance, has done a great job with the product. I use the product personally. I find it very addictive and end up spending a lot of time on it than I would like to, and really, inspiring from a product perspective. People like, our team who trying to build product. We look at all the great things they have done, and in terms of what they do with the data, where they store the data, or who has access to data, to be honest, I have no insight on it. I have no preview to that information, so I really can't really speak about that. But I really admire what they have done on the consumer side, bringing great product to the consumer world.
Verishop CEO Imran Khan, thank you as always for joining us. And stay with us, because speaking of TikTok, we're going to be covering this as well in the next segment, that popular video app facing criticism from both Beijing and Washington, why TikTok is pulling out of Hong Kong and may find themselves also blocked in the U.S. All of those details next. This is Bloomberg. TikTok is pulling its viral video app from Hong Kong. This is after Beijing enacted sweeping powers to crack down on national security threats in the region. The Chinese-owned app continues to face scrutiny as well here in the U.S. and beyond for censoring content. For more, I want to bring in Bloomberg's Shelley Banjo. Shelley, your thoughts on TikTok pulling out of Hong Kong and perhaps some of the real underlying reasons of why they're doing that?
Yeah, definitely. I think this was actually quite an astute political move on TikTok's part. Unlike some of their competitors like Facebook and others, they kind of saw the political winds shifting in Hong Kong and in China and realized that they could actually come out ahead and kind of appease some of the U.S. officials and others who have accused TikTok of kind of handing over data to the Chinese government. This way, they can pull out. They can say, no, we're not going to agree to give any data to the Chinese government, while looking good in the U.S., but also looking good to Beijing, which is happy to see another social media platform that protesters and other anti-government folks have used in Hong Kong to organize.
Well, exactly. I mean, doesn't this just help the Chinese, given that the app, as you mentioned, was for really pro-democracy protesters? A lot of the ways in which they communicated, does this not just fall right back into the lap of the Communist Party?
Yeah, exactly. I mean, TikTok was not super popular in Hong Kong among the protesters just because a lot of the young protesters already kind of were nervous about the Chinese ownership and didn't post a lot on TikTok. But it was one area where both people in Hong Kong and around the world would post things about China and that China didn't have control over. Now, TikTok isn't that big in Hong Kong, and so they're not going to lose out on a lot of money. And at some point, they could allow people in Hong Kong to use the Chinese version of the app, which is called Douyin.
What does this mean for TikTok from the business perspective in Hong Kong? And then what does this also now mean for Hong Kong as they lose another social media app?
Yeah, I mean, I think that people will. I've already spoken to people in Hong Kong who are kind of bummed about it, but it's more about the need to now start to think, what's going to be next. Because Facebook and Google and WhatsApp, things that are really used to do everyday business in Hong Kong by banks and other companies, there's kind of no way they're going to be able to continue going along if they're going to be asked for data requests from the Chinese government. They're going to have to find a solution. And so the thing that a lot of people are afraid of is this the first app that's coming in Hong Kong? And what is that going to do to the business and the economy of Hong Kong if you can no longer use other apps like WhatsApp or Google?
Shelley, we bring this story back here to the U.S., and you have a lot of U.S. legislators and officials looking at perhaps banning TikTok because the parent companies you alluded to, ByteDance, we're not quite sure what they do with the data if they do hand it over to Chinese officials. What are you hearing about ramped up pressure to now block TikTok here in the U.S.?
Yeah, so for a while we were hearing a lot from senators. Senators Rubio, Chuck Schumer has called for an investigation. But for the first time, really, we saw Donald Trump today come out and say, we're going to look at banning TikTok in the U.S. And so this is important, not because he might not necessarily follow through with these threats. But just because it kind of the way he characterized it was, we're looking for ways to shoot back at China, and TikTok could be one of those areas of collateral damage. And TikTok has spent the large part of the last 2 years trying to convince America that it's an American company, especially with the hiring of a new CEO last month in Kevin Mayer, who came from Disney. And so TikTok made the rounds today and said, we are an American company. We have an American CEO. We employ 1,000, hundreds of thousand people in the U.S., and we should be treated like an American company. And so you're going to see that battle play out, I think, especially in the months leading up to the election.
Our thank you is always there to Bloomberg Shelley Banjo. And that does it for this edition of Bloomberg Technology. Reminder, we are live streaming on Twitter. Check us out at Technology. Be sure to follow our global breaking news network at Quick Take on Twitter. This is Bloomberg.